Bear markets and bull markets operate and act very differently. A bull market's job is to scare you out, to make you feel scared a lot, right? Even as it moves and trends higher and higher over time. It could even be moving higher over a decade, and its job is designed very specifically, make you feel bad for being in, get you to get out. A bear market's just the opposite. How does a bear market lure you in, right? That's the job of a bear market, to get you back into the market so it can destroy more money. They're very different. This week, we have to talk about those characteristics because two really big things happened this week. I'm recording this after market close on Thursday, the 10th. And there is some massive news coming out and has come out this week. And we need to talk about why it's actually more bearish than bullish. Stick around. Hey everybody, this is RC Peck with Fearless Wealth, and this is my weekly update. And we're going to talk about two things specifically. One, we're going to talk about the implosion of FTX, which was one of the big 5 cryptocurrency exchanges in the world, definitely in the US, and talk about what led to its downfall. It absolutely has hurt millions of people, and it was not the first. The second thing we have to just also look at, not have to, but want to also look at, is market direction. So I want to look at the NASDAQ. I want to look at the S&P. I want to look at a part of the stock market that really can help us understand which direction it's possibly going next. So let's jump over to the price charts. And I will also finish with looking at one of the best sectors. Still was the best sector last year and is the best sector this year. So let's jump over to the price charts. So this right here is the NASDAQ 100 tracking symbol QQQ, and you're looking at a 3.5-year price chart. And I simply want to just show you the trend, which started near the very, very, very end of last year, very beginning of this year. And that is a downtrend. That's what a downtrend looks like. I put the guardrails in so you could see. And the reason I thought this was important is because as long as that trend stays intact, it almost doesn't matter what happens within that trend. That could even be a sideways channel, and it's the same thing. As long as the price stays within that, it doesn't matter. So Thursday had a massive gain. The NASDAQ was up over 7%, which is a really big increase on a daily. I mean, literally probably a third or a quarter of all the losses of the year got, taken away today. Now, here's the thing. Huge gains of 5, 6, 7, 8% in a day. Those are signs of instability. Those are signs of bear markets, really bad bear markets. Think of 2008. That one, the S&P fell 58%. Or think of 2000, the S&P fell 50%. In the 2000 dot-com crash or tech crash, the NASDAQ 100 fell 83%. Now, what's interesting, at least to me, in the 2008, the Qs did not fall. The NASDAQ 100 did not fall more than the S&P 500. It actually fell less. The point being, when you look at that chart, your brain's like, oh, got it. Trending down still, even if there was a 7% up day or an 8% up day. Those are signs of instability. And it's not just the NASDAQ 100. Here's the S&P 500 via symbol SPY. The downtrend is shallower, but what I'm noticing is still the market is very calm. Yes, it has trended down. Yes, at its lows, depending on how you're measuring the market, is anywhere between 20% down or 35% down at its lows, and it has corrected up since then. But the trends have stayed intact. They're still trending down, even with a day that's 5 or 6 or 7 or 8% higher. What I also wanted to show you was just the semiconductor ETF without dividends being included, just literally looking at the price. And you can see here, this was an incredible one-day move for SMH, which is the Van Eck Vector Semiconductor ETF, up over 10% in one day. Again, what happens in the downtrend almost doesn't matter. What's most important is, are the lows getting lower over time or not? right? So if you look at the price chart right here, you can see, oh yeah, the lows are actually getting lower over time and the highs are getting lower over time. That's a sign of instability. And the reason I bring up SMH is because semiconductors often lead the market up and lead the market down. And today was no different with semiconductors. Again, I'm recording this after a market close on Thursday, the 10th, November 10th. Pretty amazing 10% up day. Now, one sector that is doing phenomenally well and has been, though there have been some false breakouts in both direction, is energy. Energy is looking great. It's still in its uptrend. It's looking to break to a new high. And what I want to do here is also just show you it's super big, zoomed out. Let me zoom out really far and just show you this price chart and energy. Now, this is dividends not included in here. So this is literally just the price of XLE going back 20 plus years. And what I noticed the most is a few things that I want to point out to you. Historically, XLE has not really been able to survive above the price of $90. Now, it's above $90 right now, but your brain can see back in 08, it just barely got above 90 and then got sold off. And then back in 2014, it stayed above $90 and then just couldn't stay above it and fell below it for the rest of the year. So here we have two attempts in 2022 for XLE. Again, there's no dividends reinvested. This is just the price of the Energy Select Sector Spider Fund, unadjusted, which means not having dividends reinvested. So you can just see right here, it's really battling. Now look, if XLE can stay above 90 and really start to build a base, you can see that this is a brand new bull market for energy. This thing could go for a decade. And in fact, if you look back to the early 2000s when everything was imploding, energy fell, but it only fell 25% peak to trough. And then it did great from 02, 03, 05, 6, 7, 8. So that bottom of 02, which was the bottom of the tech, all the way up to, the end of that bull market, right? The beginning of the global financial crisis, energy did really well. We could see that in 2022 again. Lastly, I want to show you a price chart of FTX. Now, if you don't know, FTX was a crypto exchange, one of the largest crypto exchanges on the planet. Now, here's the thing. FTX was kind of considered the blue chip, the safe exchange in crypto, the one that you could absolutely guarantee that it was going to be there. It's gone. It's insolvent. People's money, which was there, they cannot get to. FTX was not the first one. We had Celsius and BlockFi and Voyager. Those were smaller. FTX is much bigger than those three here in the US. And FTX has imploded. And from what I can tell right now, this story is moving really, really fast. The founder of it, Sam Bankman-Fried, what it looks like he did was he took money from the exchange itself, and the numbers are varying between $6 billion, $8 billion, $10 billion, and he moved it over into the investing branch called Alameda. That money is gone. It looks like, from what I'm seeing, again, it's moving fast, is he literally took people's funds and moved it over to the investment branch, and that is gone. Now, this is an insolvent company. It's super, super sad. Here's the thing about crypto. Crypto's been okay. I mean, crypto is down and crypto's been hit hard, especially, just specifically looking at BTC, Bitcoin, and Ethereum. But it hasn't been crypto itself. It's been the people behind it that has really hurt it. I think that's really the biggest news for this implosion of FTX and the insolvency. It's been the people behind it that, the ones that said, we're for everyone, we're the everybody person, we're the non-government decentralized. Man, they are turning out to be very dangerous people. Okay, so what's the takeaway here? The Nasdaq's in a downtrend. That is not new. That started at the beginning of the year. Call it 10 and a half, 11 months ago. The S&P still in its downtrend. Semiconductors, which often lead the market up and down, is still in a very strong downtrend. Energy is wanting to break out from its, the last time it tried to break out, or the first time it tried to break above $90 was in 08. Let's just call that 14 years ago. So for 14 years, energy has gone nowhere. During the same time period, tech, consumer discretionary has absolutely skyrocketed. So if XLE stays above $90, that is the start of a new bull market, and that can go way, way higher, even though energy has done well this year in 2022 and 2021. So look for XLE unadjusted for dividends to stay above the 90 and move higher. Definitely could be something you may want to look at. Again, of course, everyone, this is for educational purposes only. Please understand that investing can also include permanent loss of capital. Thank you for being in my world. I appreciate you watching these videos. Please let me know where you think I got it right, where you think I got it wrong, what I missed. And if there is curiosity in seeing how we grow our clients' money in a powerfully simple way, a way where we actually rebalance our clients out of the market when it gets dangerous in a downtrend and keeps it safe. The next step is super simple. You can just reach out to us. You can just reach out to hello@fearlesswealth.com. Thank you again for being in my world, and I will see you guys again on the next video. Okay, take care.